Here we are then. It's another Monday morning. And if it's 8:30 and it's Monday, then that means I'm here to do a property finance Q&A. So welcome. If you're watching this, wherever you're watching it from, whichever stream you're watching it from, YouTube or Facebook page or a Facebook group, great to have you here. And if you're watching the replay, great to have you here too. So live or replay, we get together. Maybe you're familiar with this. Maybe you've tuned into other Monday mornings, because I'm actually here every Monday morning, pretty much throughout the year, and for a very specific reason. What is the specific reason? It's to answer questions on property finance, specifically property finance, because I rely on my 20 years plus experience as a broker, property finance broker. A few people saying good morning, so there we are, good morning. Hey, this is interactive, so if you don't ask any questions, I don't have anything to answer, and it won't be very long. It tends to be doesn't tend to work like that. You know, people ask questions. I say I'm here for 30 minutes. That's the aim. They'll come on here at 8:30 and log off at 9 when everyone's questions are answered. Invariably, people's questions stretch on beyond 9 o'clock, and I, make the commitment that I stay and answer every question. And so, pop your questions in the chat box, and the quicker you get some questions in there, the quicker I'll start answering them. A few more good mornings there. So some Facebook, some YouTube people coming in there with some good mornings. So good morning to you. Okay. And speaking of YouTube, I had a really nice comment over the weekend. I did a video tip a couple of weeks ago about sale and rent back, or SARB as it's known, and why in the residential world, at least, that's an illegal activity unless you happen to be licensed by the FCA to conduct it. So what does that mean, sale and rent back? So it's someone that owns a property now says, hey, will you buy my property, but I want to stay in it and rent it out after you. So I'm now the owner, I want to be the tenant. And you can't do that. You can't do that anymore. It's okay if in commercial, if you've got a shop owner or something like that and they want to just sell the ownership and carry on running the shop, that's perfectly okay. Residential terms, big no. So I did a video about it a couple of weeks ago explaining why it's illegal, how it used to be legal, and then people that abused it forced the FCA to make it illegal. Unless you're licensed. And the nice comment I got was someone posted on there and said, really pleased you put this video up. I'm just considering some kind of deal along that nature. I'm considering doing a SARB deal, or I was. I now realise it'd be a massive mistake if I did it. So you've really helped. Thank you very much. Now, I like comments like that. And this week, actually, if you're, I don't know whether you're subscribed to my YouTube channel or not, but if you're not, it might be an idea to do so. Let me give you a link, because this week I'm talking about the different ways that you can get funding for your refurb projects. So let's give you a quick link onto the YouTube channel. So if you copy there, pop that in there. Okay. So if you haven't checked out the YouTube channel yet, go have a look when we finish the course, not right now, because we're talking. But there we are. So a few questions coming in there. So great. Thank you for that. Keep firing your questions in and I'll keep answering them. So, yeah. Where have we got? Well, I'm going to scroll right up to the top. Don't want to miss any comments. And we're starting with JCM coming in there, not JCB, but JCM. Good to see you, JC. Coming in from YouTube, so good to see you there. Okay, so if I agree a price of 95k on a property, can I get a bridge of 75% of that? Yes, you can. In fact, you might even be able to get more than 75% of that, JC. If your asking price is higher, let's say the asking price is 110, I don't know what it is, but if the asking price is 110 and you use one of the 5 types of bridging, which is a market value bridge, which lends on the lower of the asking price or the value, if the bridger's valuer goes out there and says, okay, we know you're buying it at 95, but actually, yes, it is worth 110, you can get 75% of 110. And so that £15,000 in this case, discount that you've got to value, that forms part of your 25% deposit. I've done a video on that, how to shrink your deposit to way less than 25%. And you can find out more about market value bridges by looking at the video, the 5 types of bridging. Let me put that in there for you. Let's find that 5 types of bridging. Because, what's that about? Well, it's pretty much that every bridging loan fits into one of 5 categories, really. So in that way, bridging is quite simple. So let's pop the 5 types of bridging video in there. There we are. Let's pop that in there. Good. So yes, you can certainly get 75% and possibly more. What are the fees? Well, you'll typically get a 2% arrangement fee. You're charged by the bridger. You'll get a valuation fee. Again, bridger instructs a valuer on that sort of price property. I don't know, it's probably going to be about £300 or so. You'll have your own legal fees as well as the lender's legal fees. So you'd have that. So yeah, those are the fees. Now they can vary. Solicitors decide what they want to charge. And as I probably put on another video on my YouTube channel, that bear in mind that the conveyancing, the legal work for bridging, is about 3 times the work for a solicitor compared to a mortgage. So, if you're paying, I don't know, £500, £600, £700 for a mortgage conveyancing, you expect to pay more for bridging. Good. So we've got Clive PP there that says, good morning. Clive was on my experience day. I had a Zoom experience day on Saturday. This was for my top level mentorship program, gold standard mentorship program. Some of the people that have done my advanced Ninja Investor program training, I run a free day to show them what it's like being involved in my top level mentoring program, Ninja Achievers. And Clive was one of the people that were present there. So thanks for that, Clive. Some more good mornings. And we got Carl. I'm going to find Carl's question, pop that up. Now, if you're watching this, you've got a question, ping it in the chat. This is your chance. And there we are. So Carl says, morning. Good morning, Carl. Mentioned in one of your videos that some lenders will borrow the value of a property you're purchasing, not just the purchase price. Do you have any examples of these lenders? Yeah, they're bridgers, Carl. And you won't have heard of any of them because they don't like to make themselves known to the general public. They like to keep it quite under their hat. But yeah, listen, here's the deal, Carl. We're brokers. So you find one of those deals, come to us and we'll pick the best of the market value bridgers for your deal. So be very happy to help you, Carl. Great. So we've got any more questions? JC's popped back with another one. So you're active this morning, JC. That's good. Secondly, yeah, okay. Do I tell the mortgage provider what the new value is, e.g. 150? What if the provider does a survey and said it's... now, here's a really good question. This is a really good question. Okay. So, and I've been seeing this for the last 20 years. Okay, so and this is nothing to do with bridging. This is just like any property you go and buy or get revalued. So let's assume that you put on the form, because one of the questions on the form is what's the value of the property, and you put what you think the value is. So in this case, JC would put down 150,000. Okay, so is the valuer going to go here and is the valuer going to turn up at the house, have a look round and think, hey, you're a bit short here. This is actually worth more than that. I'm going to value it above 150. Almost never does that happen. So the typical response of a valuer is to say, they might think, yeah, actually this is worth more than this, but their response is going to be, yep, it's worth 150. So they'll never value it. Almost never will you have a circumstance where they're going to say, sorry guy, you got this wrong, it's actually worth more than 150. They'll just default to the value you said. The only time they'll differ from that is if you put 150 and they think, no, I don't think it's worth this. They will down value it from what you said. They'll never up value it. Rarely, if ever, have I seen an up valuation where someone's been too conservative. So of course you might say, well, I might as well say, if I think it's worth 165, what's the point in being conservative on it? I might as well say it's worth 165, and I think you're right. That would be the right thing to do. You'd say, what you think the best valuation could be of that property. I mean, this is more about refinancing, really, because purchasing is different. Actually, talking about purchasing, it's a very interesting phenomenon going on right now. Not entirely unexpected, I have to say. So you'd probably be aware that there's the market is quite frothy at the moment, and a lot of people are piling in with above asking price offers. Now, in their haste and keenness to win a property. Now, what's tending to happen is that valuers are going out there and saying it's not worth that, so they're down valuing it. And of course, these people that made the offer have really based their offer on the amount of cash they've got to put down. So when it comes back, whatever it might be, 20 grand less, they're in a dilemma, because they've either got to A, find another 20 grand cash deposit, and they may not have that, or B, start going back to the agent and the seller saying, well, I know I said I was going to pay X, but actually the valuations come back lower. So either buyer or seller are pulling out, and these properties are coming back on the market. So the message here is, if you're outbid on a property with an agent and it goes under offer, don't think that's the end of the story, because it may well come back on the market. So good question there, which prompted to talk about a couple of points there, JC. So thanks for that. Watching this, got a question? Put it in the chat box, and I'll answer it. Charlie says, good morning. Good morning, Charlie. And great to have you on board. Charlie's one of the pretty much the latest member of my Ninja Investor program. Just made that investment back end of last week. So great to be working with you, Charlie. I look forward to helping you on the deals you're going to find, and we'll analyze them and make sure that they keep you good on that, and look forward to helping you on that. Okay, so what else we got here? Some say, yes, I remember you from last week. So following last week's question, good to have you back again. on building up my portfolio. What is your comment on buying from auction? I have 15k to spend and I live in Birmingham. Right, I'm glad now you've corrected it to say you've got 150k, because I was gonna say you've got pretty much no chance. By the time you've paid stamp duty, because even with the stamp duty holiday, investment properties still have to pay the 3% surcharge. By the time you paid the auctioneer's fees, by the time you've paid whatever the seller has stuck in the legal pack as extra fees, you probably spent most of that 15,000. Fortunately, it's 150,000. So you just missed the. Oh, that's JC's one there. So JC's back with another one. Okay, so you got 150,000. Okay, so let's go back to your question. What is your comment on buying from auction if you've got 150,000 to spend and you live in Birmingham? Well, you should be at now. You may be able to find properties for cash in there. I don't know if that's your question. You know, is your question, can I borrow? Can I buy properties in the Birmingham area from auction for 150 grand cash? Possibly you can. But you can always top that up and buy more expensive properties to do up and use bridging finance. Seems plausible. Again, with auctions, always beware and absolutely read the legal pack. So I've done a video on that. Let me find this video for you. This might be interesting for you. What you need to know if you're buying at auction. Let me find how to finance an auction purchase. Is that the one? No, there's another one here I'm looking at. Let me find that. That's the one, right? An auction property. Let's put that one in there. Just going to drop this one in the chat box for you, some say, because this is going to be useful for you. So these are some of the things to watch out for if you're buying at auction. Read the legal pack, because there's often hidden buyer costs in there that the unwary person at auction would think they've, I don't know, let's say 150. You paid 150, you think, great, I've got a property for 150. You go to the auctioneer and they said, great, well, we need 160,000. And you say, well, but I've only bid 150. And the auctioneer's assistant would say, yes, but of course, in the legal pack, you can see there's another £10,000 worth of fees. And that does happen. Might not be 10,000, but it could be several £1,000s. So big thing is to, if you're going to buy at auction, some say, read the legal pack. And so if you've got any, if there's any follow-on from questions there, ping them in the chat box. Okay, we've got JC back again. Do I need to tell my solicitor this property is being bought with bridging finance, and will they charge me more? Yes and yes. I sort of alluded to this a few minutes ago. And so you will need to tell your solicitor the property is being bought with bridging finance, because they're going to have to deal with the bridging finance lender's solicitor. And that adds a different context onto the work they have to do. And will they charge you more for this? Almost certainly they will. As I said previously, then you've got the work for your solicitor compared to a mortgage or cash even is going to be about 3 times the work. So yes, please do expect them to charge you more. Good. Hey, Lee and Jay, good to see you guys here. So Lee and Jay were jumped on my Ninja Investor program training last year. So good to see you guys here, and happy to help you with your purchases and analyze your deals, because that's what I do with the people that are at my advanced level of training. Okay, so you're coming up against the same issue a lot, lady. whereby estate agents will not accept offers unless we viewed the property internally. Really? Okay, that's interesting. Then it's on a first come, first served basis. On top of this, they ask for a proof of funds if it's a cash offer. Yeah, that's natural. That's normal. What's the quickest way to provide this via bridging? Okay, so some different questions here. So let's drill down into some of these. Finding that a bit strange because particularly in the lockdown situation we're in, hopefully for not much longer, but if more and more agents are now doing virtual viewings, whether they're live virtual viewings or recording taken by either the agent or the seller on their phone and a walk around the property. But that's not the case all over the country. I was talking to one of my mentees on one of my mentorship groups, Ninja Achiever mentorship groups, and they were saying that up in Hull, really, you can't do. The agents are not switched on yet to, or certainly not the agent she's talking to, are switched on with virtual viewings yet. So I guess the question there is that because they haven't got a virtual viewing option at all? So you've no option. The only way you can view the property is to go and view it internally. And are they talking about a physical one? So, I don't know why those agents are doing that. You think agents would be keen to sell a property? Now, is it because, trying to think this out as we go through, is it because they're getting a lot of people make offers and then dropping out? So people that are not viewing it at all, making offers and then latterly dropping out. So is this a response, an agent's response to time waster buyers or would-be buyers? Maybe that's it. Well, most of the time it's first come, first served. Okay, so if you're using bridging finance and you're asked for proof of funds, how do you do that? Really, really simple, Lee and Jay. You just ask us for it and we'll get that for you. We can turn that round. Sometimes we turn them around same day, but we prefer to say give us 48 hours. So when any agent, and I think I covered this on the training under negotiation transformer module, when any agent says we need proof of funds, your answer is fantastic. Give us 48 hours. We'll have it. We'll have your proof of funds for you. We do a quick inquiry form, me and you, and ping that over to my business partner Tony. He'll get your terms out same day, next day. So really simple. Good. Okay. Good to see you guys here. And hey, if you're watching not watching it live, but you're watching the replay, let me know you've watched the replay. Just put a comment in the chat box if you're watching the replay. Just put #replay in so that I know you watched it. That'd be really useful. There we are. Great. Okay. So you couldn't see my face there. Don't suppose that worried you over much while I was chatting about Lee and Jay's thing. Oh, we've got a few more questions coming in now, so that's good. So we'll crack on with those. Yeah. Now, I don't know whether you watch these. Is this a one-off and you're here the first time, or if you watch it on a weekly basis? But I've been doing this for the best part of a year now, and I've got over 50 hours worth of video, and it's a great resource. Now, imagine if you could have like a word search facility. So you just put HMO in there, or fees, or whatever it is that you want to do, and up comes every time I've mentioned it in the last year. How good could that be? Well, actually, that facility exists, and I've got it as part of my Fiverr Tribe subscription. So for literally £5 a month, no joke, £5 a month, you can have access to 50 plus hours of these Q&As and get it's a mine of information about property finance. Let me just put you the link in there. Let's just grab that one up. So if you're enjoying this, think it's a valuable resource. You know, is it worth a $5 a month to grab all the back catalogue of these Monday morning Q&As? Maybe you think it is. Just put in that link in the chat box. If that's interesting to you, hop on there, go to the Fiverr Tribe page, get yourself signed up for that, and you'll have access. And of course, every week I load the next one in, so it's an ever-growing resource. Good. So here we go. Carry on with the questions. MTB Trail Hub. Good to see you. Thanks for coming on. What is the standard percentage amount of money down for a bridging loan? And how often do bridging loan applications get applied? Good question. Or two questions, really. So standard percentage deposit is 25%. A bit more if you're buying a commercial property, but for residential property, standard is 25%. But I don't know whether you were watching earlier, MTB. You might want to, if you weren't, you might want to watch the replay after we finish. But I actually spoke about my 5 types of bridging video, because pretty much every bridging loan would fit into one of 5 category types. Now, market value bridges in particular will lend on the lower of the asking price or value and not the purchase price. So in that case, you can quite simply shrink the deposit down to way less than 25%. I mean, we've done deals with certainly 10% deposit on bridging because they've been buying below asking price, even 5%. And then, of course, there's a done-up value bridge, which is delay completion bridging, and you can actually buy that without a deposit at all, but you'd have had to spend some money on a refurb. Go to that video, look up the link in the chat box, find that video, and you'll see that. Good. And so how often do bridging loan applications get declined? Almost never. Bridges very rarely decline to lend it because they pretty much lend to anyone. So you're probably used to mortgage lenders being quite picky who they lend to, and also what property they lend on. Bridging lenders are radically different. You know, bridging works in diametrically opposite ways to mortgage lenders on many aspects, and that's one of them. So people very rarely, if ever, get turned down for bridging. I've done a video on that as well, you know, how to get pre-qualified for bridging. So you know you're going to get every bridger in the UK lending to you. Very simple. So go check that video out. You know, various bridgers might not like the property over much, but hey, there's dozens and dozens and dozens of bridgers. So as brokers, it's never an issue for us to find a bridging lender for you. You just find your job is to find the deal. Our job is to find the lender. So if you find a deal, just get in touch with me. Simplest way to get in touch, good way to do that is my property finance expert Facebook page. Let me just find that for you. We'll pop that up. So just putting that in there. Anyway, just putting that in the chat box there. Yeah, just ping me a message in there whenever you find a deal, MTB or anyone else that happens to be watching that. When you find a deal, connect with me on there, and we'll find you the best deal. That's what we do. Great. JC M's back with another one. You're getting your questions in this morning. Great. Thanks for that. Really appreciate the participation. I will be working with you a lot for bridging and refinancing. Brilliant. Great to hear that. We'll look forward to working with you, JC. Can I get a discount on your fees? Simple answer, yeah. You know, if we're getting people using our brokering services regularly during the year, then we'll take a business decision on that. That'll be my business partner, Tony. He's the MD of the brokerage. He runs it day to day. I'm just the shareholder now. So I've stepped back from the actual brokering side of things. Spend my time doing stuff like this. So Tony's too busy brokering to be chatting around on Facebook and YouTube and that sort of thing. So, yeah, I mean, we've got clients that use us multiple times a year. And we've got a strong business relationship with them. What I would say on that is, if you come to us with the promise of doing that, well, that's a different matter. Let's just see, the old saying, proof of the pudding. So, once we've done a deal or two with you and you keep returning, then we'd make a business decision on that. I want you to be part of the team I work with on your property journey. Great. We'd love to be part of your team. Excellent. Appreciate your views on that. Thank you very much. Great for your participation this morning. Really appreciate that. Barbara, there we are. Nice to see you on the chat this morning. What's happening in regard to business loans for things such as B&Bs? Same as always, Barbara. Extraordinarily difficult to get to. I've done a video on this. Let me find that one for you, because that's it's almost impossible to get a business loan on a B&B. Not because they're a bad business. I mean, and I think when we come out of lockdown, it's going to be a boom time for the British holiday market, because we're going to be holidaying in this country and not going overseas. Certainly in 2021 and probably 2022 too. So great time to be doing short-term accommodation in the UK once we come out of lockdown. When's that? Is it April or May? I think it's April for April the 12th for holiday lets, cottages, and hotels are in May, aren't they? I think at the moment. So yeah, but the problem is not it's a B&B. The problem is the way that the current owner runs and structures their B&B business that make it very, very difficult. Now, the good news is that typically only cash buyers can buy B&Bs. So we've helped people buy B&Bs using bridging if they haven't got the cash, and then they work like stink, build the business up, and then after a year we take them and put a commercial mortgage on it. So commercial lenders in principle are happy to lend on B&Bs, but they want to see what your occupancy level is and what your profitability is. So they need to see you've got a viable business that can support mortgage borrowing. Let me find that video, because you're going to find this useful, Barbara. So let's have a look. Where are we? B&Bs. Excuse me while I just try and find this B&B one. Oh, there we are. Got it. Right.
So, you into service accommodation for what?
Check this out, Barbara. Not necessarily right now, but when we're finished here. There we are. Check that video out, and that'll tell you, give you a lot. And if you've got one in mind, then ping me a message, because we can certainly help you acquire a B&B. I go into quite a lot of detail about what a typical B&B owner looks like and what they're looking for. So there we are. Some say it's to do BRRRR. Yeah. Have you noticed this? That there seem to be more R's being added on as we go forward. Now, it used to be just BRR, buy, refurb, refinance. And then we got BRRR, buy, refurb, refinance and rent. And now we've got a fourth one's crept in there. And from what I've seen, that's for repeat. Okay. So the challenge is, who can find a fifth R to chuck on the end there? So we can have BM5Rs, up to BM4Rs so far. So there we are. Right, we've got any more questions? Let's stroll around. Yeah, okay. So if you want to do buy, refurb, refinance at auction, yeah. The key is to, here's the real key, some say, at auction. Go there with your numbers very worked out and a clear point, a clear figure at which you stop bidding. Because auctioneers love to get you really bubbling and bidding and bidding and bidding, and they'll make you pay more. So there we are. So oh yeah, JC's back again. I thought that was your last question. You got another one in there. I don't mind. It's okay. So you're only doing the 3 R's there, not the 4 R's that some say was. Do you refinance before 6 months because your refurb will take a maximum of 2.5 months before renting it out? Or can you rent it out and then refinance? Do both. Your choice. You know, it makes sense, obviously, to get a tenant in there as quickly as you can, JC. So, you know, and some landlords, they've got a tenant lined up even before they've finished the refurb. So, you know, you finish it one day, the refurb one day, the tenant's in there the next day. That's the ideal situation. So get a tenant lined up as quick as you can and pop them in there as quick as you can. Definitely. It's a good question. Okay, so here's a bit of here's a long question. You're not gonna. I'm still here. You're not gonna see me while we got this one. But I think it's important. See, why do I put these up on screen? Because I think it's important that you can read the question rather than just listen to me reading the question out. So that's why I do that. I think that's quite important, because then, you know, a lot of people are you know, visually orientated, not orally orientated as their main sense. So, you know, they get less from it if I didn't show the question there. Okay, so Facebook user. Now, what Facebook user means is that I go through this StreamYard streaming service that puts it out into multiple channels. And if you're coming through Facebook, you have to give StreamYard permission to use your name. If you don't tick that box and type your name in, then it just comes up as Facebook user, and I find out actually who it is when I go back into the page or the group later in the day. Okay, so I've got a question. Currently purchasing properties, HMOs from a family member. Currently purchase them at market value and using cash. Okay. Currently in the process of a second property. Would you say this is the best approach? We can't refinance or remortgage yet, as the good deals only start 12 months from launching the company. So you've got to do it. Okay, so okay, well, you know, a new company can get HMO mortgages, but maybe you've looked at that and thought, don't like the deal, or don't like the rate that we can get, and it gets better once we've been established for 12 months. Okay, maybe that's what you found out. Okay, or 12 months from the purchase of the first property. Now, could that be because you're inexperienced landlords? So it's not the company, it's your landlord experience, because a lot of HMOs, particularly the bigger HMOs, you know, 7-bedroom plus, want you to have at least a minimum of 12 months landlord experience. So, you know, maybe that's it. So you find yourselves in a stalemate. Maybe it's a good thing, depending on the expected market. Well, yeah. Is this the best approach? Well, if you can't get a mortgage at a rate that you want, then it would seem to be it is the approach. You know, I'd have to have more details about your personal situation. And if you want me to look at this in more detail, again, ping me a question in the property finance expert link that I gave you earlier, and I'll have a look at that in detail. You know, so see what your personal situation is. There we are. You can see me again. So there we are. Good. Just want to make sure I haven't missed anyone. Always quite a few questions popping in. there. Now, so I'm keen to make sure I haven't missed anyone. There we are. Right, okay, so we're back on that. Good. Oh, you've had that as well, Richard, have you? Richard's on my Ninja Achievers mentorship program as well. So good to see you, Richard. You've had it too. Agent wouldn't take an offer unless you'd physically viewed the property. Wow. I wonder what the motivation for that is. Just trying to think of the thought process behind why an agent would say that. You know, maybe ask them. Those guys that are suffering this, saying the agent won't accept an offer from unless you view. Why? What difference does it make? I'll be curious to know the thought process behind what an agent thinks there. Jonathan, good to see you, Jonathan. Is one of my advanced Ninja Investor Program trainees. Good to see you there. You're going to come up with a question. I saw that a bit further down. So there it is. So what are your views of the 95% lending to first-time buyers that may be starting in April? Well, we've got to wait to see if that's a reality, because like a lot of these things, like stamp duty being extended, you know, these are not confirmed yet. They're rumours that may well be confirmed in the budget this Wednesday. Yeah, I don't see any detrimental thing. Now, if you're flipping, then it makes it easier for you to find, so it increases your market, doesn't it? If there's first-time buyers have only got to buy a 5% deposit. Broadly positive thing, I think. Can't see any, to be honest, it's only been floated as an idea, and I don't tend to focus too much on things until they're reality. But can't see any negatives in that. Good to have you on board. K-Hub, there we are. You're back again. Good to see you. Hope you're well. Well, I am actually. I am well, thank you. If there is a light refurb required, are buy-to-let lenders put off like this? What constitutes a light refurb? Well, okay, so the basis of mortgage lending, buy-to-let mortgage lending, is that properties are day one rentable. That's the basis. So you don't need to do anything to them. You just need to put a tenant in there. Now, a degree of tolerance is given on that. So if it's a minor refurb, I would say light refurb is maybe a bit too much. A minor refurb, so something you could do in a couple of weeks. Redecorating, putting new flooring down, that type of thing. That's certainly okay. They won't be put off by that. Typically, anything you can do in 4 weeks. Now, lenders are going to start, if it involves, ripping out the kitchen, ripping out the bathroom, then some lenders are not going to be too happy with that. And of course, what is the condition of the property? Now, a lot of people, a lot of investors think that it's got to be functional. And what does functional mean? Well, it's got a kitchen, it's got a bathroom. They're not particularly good, but they're there, so you can use them. So usable or functional is not the criteria for buy-to-let mortgage. It's desirable and rentable. So if you've got a 1970s kitchen that actually, it works, but the reality is who's going to want to pay good money to live in that? And that's the thought process of mortgage lenders' valuers. So anything you can do in under 4 weeks, and probably not as extensive as kitchen and bathrooms, and new windows and that type of thing. So a light little tidy up. There we are. So still got a few more questions in. So good to see a good bunch of people in today. So if it's your first time here, pleased you found it. Do come back. I do this every Monday morning, 8:30 till 9. But as you're seeing today, we run over. Steve, someone else on my Ninja Investor Program, did that last year, didn't you? I've been working with you ever since. Good. I've been negotiating on 12 plot new build. Okay. And you've got the experience to be able to sort of carry that off. So that's good. Project needs a viability assessment to reduce the amount of affordable houses. Yeah. So different councils in different parts of the country, once you get over a certain number, 10 is a common one, but different councils have different rules. They want you to chuck in some affordable housing. So I said I'd need a delay completion based on this. Yeah, because you want to get that. The agent responded with this, and I'm not entirely sure what it means. We would suggest you forward us with your letter of your intent on unconditional terms. I'm aware that you understand, you're well experienced on fields and understand the requirement. Okay, so the first part of that letter is quite self-explanatory, Steve. They're just saying we're not accepting conditional offers. We're not accepting delayed completion. We're not accepting subject to offers. You either want it or you don't. Is the that seems to be that response there. Now that would suggest that they've got plenty of interest, because if they're struggling to find a buyer, they wouldn't be quite as in your face as that. Now, if you're asking what about the second part of that, I'm aware that you're well experienced in this field and understand the requirements for know your client. That's a puzzling thing, because know your client isn't a buyer-seller requirement. So as mortgage brokers, we have a requirement to know our clients, which is why we get them to fill out a detailed fact find, before we give them any mortgage advice, in particular mortgage advice, pretty much bridging advice as well. But so why would I don't get that, Steve? So if you want to give me a call later and we'll have a chat about that. But yeah, I understand that they don't want to take conditional offers. They just want to say, tell us what you're going to pay for it, or tell us, or don't bother. Seems to be what they're saying there. That's not unusual if they got a lot of interest. It might also go to sealed bids as well. But don't know what the other one is there. But thanks for your question, Steve. Hope that's helped. And if you need any more help, then let's talk privately. Facebook user, there we are. You got a rental property, 1900 terrace. Okay, so typical Victorian terrace, due for insurance renewal. Your mortgage company have asked what the real build cost would be. Is there a hard and fast rule? No. There's not a hard and fast rule, but if you look at on any mortgage valuation report, part of it would say what the rebuild cost is. Is the rebuild cost higher than the value of the property? Almost always, yeah. On Victorian terraces, 100 plus year old terraces, the rebuild cost is almost always higher than the value of the property. Or, is that the actual real build cost or the insurance rebuild cost? So the insurance rebuild cost is higher than the value of the property. So is it like for like? No. You might get, if you Google Royal Institute of Chartered Surveyors, RICS, you might find something on their website that gives you a indication on that. But go back to when you got a mortgage offer, go back to the valuation report and it should be on there. There we are. PR Max, good to see you back again. Karen, oh, there we are. I'm carrying today. Good morning, GM. Your buy-to-let land for 1.5 years. Good. Can I get a commercial valuation for your 7-bedroom HMO? Are you eligible for an HMO mortgage? Okay, with some lenders, yes. With few lenders, no. So typically, they'd want you to have a minimum 12 months of landlord experience to get a wider spread of HMO lenders. You've got that, so you tick that box. There's a few of them that want 2 or even 3 years. You wouldn't tick their boxes, but yes, you are eligible. Now you've got a 7-bedroom HMO. Actually, I'm going to do a video on this, I think, in the next few weeks, because this question comes up a lot. Now, the answer to that is yes, you probably will get a commercial valuation in your 7-bedroom HMO, and here's why. Now, you can convert a standard residential property to an HMO under permitted development rights, as long as there's no more than 6 bedrooms and Article 4 restrictions are not in place in that particular street. More than 6 bedrooms and you need to get planning permission, not a license, planning permission to now operate that as an HMO. So if you've got a 7-bedroom HMO, if it's legal, you'd have got planning permission for the change of use. Now, that means that it's now not classified as a standard residential property under permitted development rights. So, and that should be the trigger to get a commercial valuation. Now, if you want our help on that, love to do that for you. So just hop onto the property finance expert link in there and get in touch, and let's find that mortgage for you. Love to do that for you. Thanks for your question. Good to see you here again. Barbara says, thank you. No problem. I like it, Clive. Yeah, you've got the 5th. You've got the 5th one. BRRRRR. So buy, refurb, refinance, rent, repeat, then relax. Yeah, like it. Nice one. JC, there we are. Sorry, Kevin, you didn't have to apologize. Don't have to apologize for asking questions. I was asking for the 6-month rule. Yeah, well, 6-month rule isn't a rule. It's a choice that some lenders invoke, others don't. Buying with your limited company. Okay, so now here's the real question. Do you need to wait 6 months to refinance to get a good deal, or can I refinance before 6 months and get a good deal? Well, there's a number of limited company mortgage lenders that don't make you wait 6 months. Can you get a good deal? You probably can get a good deal, but you'll probably get a better deal, maybe only slightly better, but you'll get a better deal after 6 months, simply because we've got a wider choice of lenders to find for you. So if you're buying on bridging, you've got you've got to weigh up what's better for you. Is it better to sit on bridging longer, even though you've rented the property out, and incur extra months of bridging costs, so you get a cheaper deal at the back end? Or do you want to get off the bridging and pay a slightly higher rate? Now, if we're brokering the mortgage for you, we'll help you to decide that, JC, because we'll give you both options. There we are. Charlie, there we are. Comment question. Are commercial lenders easier to get approved for refinancing than a typical mortgage lender? No, wouldn't say that. They've got different criteria, so they look for different things in the borrower than buy-to-let lenders do, but they're not easier or more difficult. They're just different. Christina, not sure if your question has come through. Neither am I, actually. This one obviously does. So if it hasn't, let me do a quick scroll back, Christina. I do try very hard not to miss any questions and take them, in the order that they're put in there. Let me scroll back. I'm going to go scroll right back to the beginning to see if we've got your question. Bear with me, guys, while I scroll back here. Don't want to. If someone's kind enough to ask a question, no. The only thing I've got from you, Christina, is your good morning right at the start. So I don't know why the question didn't come through, but ping it in there quickly, and I'll answer it before I go. There we are. Yeah, I've got to scroll back down to where your question is there. There we are. And then we'll crack on. Right, got it. Okay. So, yeah, ping your question in there, Christine. I'll very happily answer it. Okay. Or now you're going to challenge me there, and I'll make apologies if I get this wrong. Seong Guan King. There we are. That's my best stab at that. And forgot that wrong. Apologise. Would you recommend to purchase a property with subsidence issues? With subsidence, if the issues can be resolved? I've heard you get issues to get mortgages or sell in the future. Okay, that's a good question, actually. Good question. And I cover this. This is part of the curriculum on my advanced training Ninja Investor program. So, if you've got subsidence issues on a property, you're going to need to get a structural engineer to tell you exactly how to rectify them. And when you've rectified them, the structural engineer will come back and give you an updated report to say they're all fixed. Now, that is going to make them mortgageable. So maybe not with every lender, but with a structural engineer's report to say that the subsidence issues are resolved, and actually, usually when that's done, the property is more solid and more stable than it was when it was built. So that's not an issue to getting mortgages. But if you're going to sell it, it can be a problem, particularly if you're selling to main residence buyers. Now, I would suggest you never do a flip of where you resolve subsidence problem, because even if you've got it there in black and white from a structural engineer, chartered structural engineer, that says this house is solid as a rock, main residence buyers are going to buy emotionally, not logically. So they're still going to say, oh, well, I don't know, something might go wrong with it in the future. It won't, but something might go wrong with it in the future. So if you're going to turn this around quickly, if it was a flip, then I think you're going to have problems. I'm not saying you wouldn't sell it, but buyers would be put off. Now, the longer the time frame between the resolution of the subsidence issue and that you want to sell it, then I think that risk dissipates. So let's say, for example, you've got a structural engineer's report to say the work was done, so you get a mortgage, you keep it 10 years, and then you decide you want to sell it, and you get an updated structural engineer's report when you put it on the market. So now a would-be buyer's got two structural reports 10 years apart to say that nothing's gone wrong, it hasn't retracted in any way. So I think that if you can buy it cheap enough, then that could work for you. So certainly you can get a mortgage on it, and the longer you wait, the less of an issue before selling it, the less of an issue that is. If you need some help on buying stuff like that, because that's definitely going to be cash buyer only purchase. If you've got the cash, that's great. If you need us to finance, to get some bridging for you on that, very happy to do that. So just ping us a message, and love to help you on that one. JC's back again. You're my favourite person this morning, aren't you? Okay. So would I advise doing 2 refurbs at a time using 2 bridging loans, or just doing one bridge at a time for someone looking to build their portfolio? Okay. No reason why you can't do multiple refurbs simultaneously, JC, the two deciding factors there is, one is how much cash have you got? So have you got enough cash to put down 2 deposits? And secondly, have you got the capacity to run 2 refurbs simultaneously? So, you know, have you got the tradesman that can run 2 simultaneously, or more than one simultaneously? If the answer is yes to both, then by all means do 2 at a time. Sure. Good question. PR says, sorry, Kevin, spelling the name. It's all right. I wasn't offended. And thanks for the answer. You're most welcome, PR. Good to see you back again. Okay, so K-Hub's back again. Me again, Kevin. What are some ways you can reasonably guarantee what the uplifted value of a property will be before you refurb? Okay, good question. So, because the issue is always, how much cash am I going to be able to recycle? So I buy it, refurb it. I want to refinance it, but the refinance determines how much cash gets pulled out and how much gets stuck in. So what are some ways that you can really, apart from right move comparisons or other comparisons that you can find on different sites, so you can go to multiple sites and look at comparisons. You can ask estate agents what their view is. But if you want it from the horse's mouth, the only really way you're going to get it is go and pay a RICS valuer to come and do your RICS valuation report. And if you give them a work schedule of detailed work schedule of exactly the work you're going to do, then you find that some of those, you have to pay them for it, of course, but some of those will come back and they'll give you a done up value. Good. Tarek, good to see you back again as well. There we are. Hope you're well. Yes, I am. Thank you. I was told by my commercial mortgage advisor, okay, if I bought a commercial property with a mortgage, we cannot refinance the property after we have added value post-development. Yeah, there's a grain of truth in that. So again, with a commercial property, it's got to be tenanted. And with a commercial property, well, hang on a minute. If it's a commercial property, then it's on a commercial lease. Unless you're talking about a residential property, but you specifically said commercial property. So commercial properties are on commercial lease, and you don't refurb commercial properties. You give them in their unrefurbed state to a commercial tenant, and the commercial tenant pays for the refurb. So let's just say it's a shop, and you lease it to a hairdresser's. It's not your responsibility to do that. All you give them is 4 walls. Now, the hairdresser business comes in there and they can spend whatever they want kitting out their salon, 20, 30, 40, 50,000 pounds. So, and that doesn't add any value to it. No, that doesn't add value because the rent they pay determines the value. So what you've got to understand there, Tarek, is that the way commercial properties are run and mortgaged and valued is completely different to resi. You know, if you want to drill down with me in more detail on that and show me a specific commercial property you want to buy, I'll give you some more guidance. But and also the thing with commercial property lenders, mortgage lenders, is they really hate you redeeming the mortgage and refinancing, much more so than buy-to-let lenders. So if you get if you have a 5-year fixed rate deal, let's say with a commercial lender, they fully expect you to keep it the 5 years. And you start redeeming that mortgage and trying to get it refinanced, then you're going to hit problems on that. So, you know, typically what you do is you buy it on bridging, you'd increase the value however you're going to do it, and then, or cash, of course, if you've got cash, and then you take it to a mortgage lender, or we take it to a mortgage lender for you, Tariq. So you wouldn't be buying a commercial property on a mortgage and then trying to remortgage it again after. That's not going to work very well. Thanks for your question. JC's back. Oh, we did that one. Yeah, okay. I don't know how I got out of sync on that, but there we are. You resent your question. Isn't that weird? You resent it at 9:30, still can't see it. Yeah, I've got it. It's come down later. So I've got a couple more to go through to get to it, but I've got it, Christina. So I will answer your question. And thanks for persevering. There we are. So hang around there. There we are. Von, yes, I remember you from previous weeks. I have a cross-collateral bridge to let quote I'd like to talk to you about. May I ring your office, you or office later today? You certainly can. Yeah. So just ping me a thing. Go into the chat, find out where you've got my property finance expert. Ping your number in there, and then I'll give you a call later today. I've got some time later today. So Von, yeah, I'm very happy to chat about that with you. Great. Song Wang Kim, many thanks, great advice. Absolutely welcome. Jason, you've been very great. I'm pleased you think I've been helpful. Looking forward to working with you. There we are. Let's make contact and let's have a chat. I'd like to know a bit more than JCM. If we're going to be working together, let's get better acquainted. Okay, we got that. There we are. Thank you, Richard. These Monday mornings get better and better. Well, hey, can't do it without you guys. You know, if no one asked a question, I'd just be sitting here looking a bit silly, wouldn't I? So it's very much a two-way street, Richard. There we are. Yours is a coming, Christina. It's a couple down. Regards to what Kim's question on subsidence, if the repairs have been done and the property has been purchased with cash, can this property be remortgaged later be remortgaged based on the market value? Well, that's going to be difficult, really, because the mortgage lender is going to say, the value is going to say to you, okay, so you bought this at X price, but you now say it's worth this. What have you done what have you done to improve the property since you bought it? So it goes back to a video. I did a video on this literally last week. If you don't do anything to a property after you've bought it, but you claim it's worth more, that's almost certainly never going to fly, because mortgage lenders only recognize work done to a property since purchase. So no, if you're buying it with it all fixed, someone else has fixed it, you can't get the uplift. Yeah, no, that ain't gonna work, mate. Or it's got a very small chance of working. So you're taking a huge risk trying to get your cash out. So we would have to say that wouldn't work. Christina, there it is. Got it. Got your question. Okay, so not sure why it didn't appear before, but we've got it now. Okay. If a buy-to-let mortgage in your own name is lately given permission to change into a short-term let, will you qualify for Section 24 capital allowance adder as a holiday let mortgage would? Okay, so Section 24 doesn't apply to holiday lets. Capital allowances you could do. Now, capital allowances, I'm going to pick that one up. Now, that's a tax-based question, Christina. and you need an accountant to answer a tax-based question. I can't really help you on that because I'm not an accountant. Okay, my background is finance, not that. Okay, so your buy-to-let mortgage lender is not going to give you permission to rent it out on a short-term let basis. That's clear. Unless you've actually gone with a lender, and there's only a few of these that actually allow that. So pretty much every buy-to-let mortgage lender, Christina, in their terms and conditions, it says the minimum letting term allowed is 6 months. So, and if you ask them for permission to change it to a short let, they're going to say, no, you're on the wrong product. So you'd need to refinance with a buy-to-let mortgage lender that did allow you to do short-term let. And there's only a handful of those. They still do it as they still underwrite it as if it was an AST, but they've taken out that the clause I've just said to you in the T&Cs, which said minimum term 6 months. They've just taken that out, so they permit that. Lord Prosper says, if you need any more help on that, Christina, by the way, just get in touch privately. Property finance expert. Refurb bridge, yeah. If you go back, I'll give you a quick explanation, but I've got a video that does that. So I put the link in here earlier, 5 types of bridging. But essentially, it's lending 70 to 75% of the purchase price and 100% of the refurb cost. So most bridges only lend on the purchase. A refurb bridge also lends 100% of the refurb costs. Christina, you're very welcome, and thanks for your persistence. Okay, guys, so we seem to be at the end. If you've liked this, hey, I've got a Facebook group called Recycle Cash. I haven't told you about that this morning yet. Some of you may be members, some of you may be coming through there already. If you're not there and you like access to this sort of stuff, then come and join my Recycle Your Cash group. Let's just give you a message on that. There we are. Let's pop that in there. We'll finish up. Yeah. Come and join the Recycle Your Cash group. Went through 900 members last week, so we're chundling on to a 1,000. Going to get there in the next few weeks. 1,000 members of that group. Great. So, hey, if you're watching the replay, give us a hashtag replay to say you've enjoyed this. If you watched it live, appreciate you sticking around. I've seen people that have come in and out, so you know the numbers of watching have been going up and down and that. So not everyone can stay for a whole, you know, we've been going over an hour now. Only come here for half an hour. What is it with you lot? You keep me here way over time. So Shane's saying thank you. There we are. So I'm going to be back next Monday, 8:30, and I'm going to answer some more property finance questions. Really appreciated the people that have tuned in this morning. Really appreciate the people that are watching the replay. Guys, I couldn't do it without you. So I'm really grateful for the interaction we have. See you guys next week. Have a fabulous week. See you next week.